Hey guys, welcome back to the channel. For those of you that are new, my name is Dan Crosby. I own Canadian Protein and a few other e-commerce brands valued at over $100 million, as well as a real estate portfolio also valued at over $100 million that I started from scratch. This channel is dedicated to providing you with the blueprint for financial freedom. But before we dive into today's video, make sure you subscribe if that's what you're interested in. Now in today's video, we're going to be discussing a question that I got from a follower, and it went something like this. If I had $1 million to invest in real estate, what are some savvy ways that I do it? Now he went on to say that he's asking for somebody that has money, but he's trying to give them some ideas, and this individual is quote unquote super scared to invest in real estate and or invest any of this capital that this person's sitting on. Now, first things first, let me just say that I think you're making the right decision investing in real estate with your $1 million. It's a fantastic opportunity to grow your wealth and secure your financial future, as we all know. I also completely understand that investing can be intimidating, but I'm here to provide my take on what I would do if it were my $1 million and if I was scared of investing. In fact, I have a first-hand experience that might actually inspire you. A few years ago, I found myself in a similar position with a chance to invest a substantial sum of money in real estate. After careful consideration, I decided to put my money into a senior community, which is a demographic of 55 plus. Today, I own several of these type of properties, and they've proven to be remarkably stable and also a rewarding investment. The most notable being Canton Manor in Canton, Michigan. This property has been extremely stable over the years, mainly due to its tenant base. And that's because senior communities tend to attract residents who are looking for long-term housing solutions. And they're not as transient as younger tenants. So what does this mean for investors? This translates into fewer tenant turnovers, which obviously also means less hassle and lower maintenance costs. And as a side note here, investors rarely factor in the cost of turnovers into their pro formas and their financial projections. Now here's some key reasons why investing in senior communities specifically, especially during turbulent market conditions, can be a good choice. First, we have stability. As mentioned earlier, senior communities offer a stable tenant base. Seniors typically seek a comfortable and secure living environment and are less likely to move frequently. This stability can provide a consistent stream of rental income even when the broader market is a little bit more volatile. Next, we have lower maintenance costs. Senior residents often take better care of their living spaces. This obviously reduces wear and tear on the property, leading to lower maintenance expenses over time. Next, let's talk about predictable cash flow. While senior communities may yield slightly lower rental income compared to market rate properties, maybe around 5 to 10% less on average, the potential is offset by the stability and reduced turnover costs, which long-term I would much rather have. The predictable cash flow is excellent for covering expenses and generating a reliable stream of income. Next, we have social responsibility. Investing in senior communities can also be seen as a little bit of a social responsibility choice. You're providing safe and comfortable living options for seniors, which can be a rewarding aspect of your investment. Now, although this isn't necessarily quantifiable, there's also something to be said for being a positive pillar in the community. And lastly, we're going to be talking about the fact that the majority of the population is aging. So as the population continues to age, there's going to be a consistent and ample tenant base for these type of properties in the foreseeable future. Now, although I went through a bunch of positive aspects of senior communities, it's also essential to note that you might see a little bit less appreciation in the value of the property compared to market rate properties, but the trade-off is often worthwhile, considering obviously the advantages that I mentioned. Now, why do you typically see less appreciation in these type of properties? For the reason that I mentioned, that you're going to see a little bit less rental income coming through on these particular properties because seniors as a whole are living on fixed incomes. Now, to further boost your confidence in investing in senior communities, I'd recommend thorough research and due diligence, obviously. Evaluate the location, the property management, and potential growth in the senior living market that you're choosing. It's also worthwhile to consult with experienced real estate professionals such as agents or whoever who specialize in this type of niche, which there's a lot of. So with that said, investing $1 million in real estate is obviously an excellent decision, and senior communities could absolutely be an ideal choice, and that's something that I would do. In fact, my experience with Canton Manor and other similar properties has shown that it can be a very lucrative and stable investment, especially during uncertain market conditions. So I hope this insight helps you feel a little bit more comfortable and excited about taking the leap into real estate investing. And if you enjoyed this video, first, make sure you subscribe for more videos and guides like this one, and hit that thumbs up. And second, if you want to have something to reference as a resource, and a lot of others like this, go to dancrosby.com or hit the link in the description below. Lastly, if you have any questions or need further guidance, please don't hesitate to reach out. I'm here to support you on your investment journey, so make sure to leave a comment below. And I'll see you in the next one.